If you follow Profit First, then you'll know that when you're doing your instant assessment, there is an aspect where it says, what is your real revenue? Well, they subtract out your inventory and they subtract out your subcontractors to tell you what your real revenue is. Hi everyone, it is Tina with Picture It Personal Finance, where I help small business owners, coaches, and solopreneurs get their money life in order in their business and at home. Today I want to talk about understanding what is going on with the income statement, also known as the profit and loss statement. I have had many clients come to me both for coaching and for bookkeeping and advisory services, and I have come to realize that no one's really ever talked them through their financial statements. They don't understand what these reports are telling them, and therefore they can't glean any meaningful information off of them. So first and foremost, you really ought to create some kind of a bookkeeping system. And ultimately what your bookkeeping system is going to track is the money that you make, what's generating that money, so you can start tracking how much money your company is making. You want to track what is it costing you to deliver the service or to sell the good that is making you the money. And then you want to understand what are the rest of the expenses that you have in your business. In other words, what are the other things that you have to pay for in order to keep the lights on or to keep your business running? And then finally, from there, you'll understand what your net income or net profit is. So step number one for generating a meaningful profit and loss statement is having a bookkeeping system. So if you don't already have a bookkeeping system, a few options for you to consider would be QuickBooks Online. This is the one that I'm certified in, and also the one that I use for my own business. And when I do bookkeeping for clients, this is the dominant system that's used. Now, QuickBooks Online is the industry leader and it is a little bit pricey. So with that in mind, some people might say, I'm not ready for this. And that does make sense. I'm not a fan of QuickBooks Self-Employed because it is not a double entry bookkeeping system. Makes it a lot harder to generate the reports that are useful and also to track balance sheets. That's not something you can do in QuickBooks Self-Employed. So stick with like the simple start or the lowest expense QuickBooks offering, QuickBooks Online offering if you can. Otherwise, look at a free option like Wave Apps. I use Wave Apps for one of my businesses that has very few transactions. And I also have helped set up Wave Apps for several of my coaching clients so that I could show them how exactly to do their bookkeeping. And then I also use Wave Apps for some of my bookkeeping clients who, again, their business is very small and they're sort of like what I would consider a micro client when it comes to their bookkeeping needs. So again, QuickBooks Online, Wave Apps, two really great options for you when it comes to bookkeeping. I will put links below. Neither one of them is affiliate links. So please know that I am genuinely recommending these because I use them and they don't give me anything. I'm not going to make any money off of that. So now let's say you do have a bookkeeping solution in place and you can produce a profit and loss statement, also called an income statement. There are several aspects of this report that you can glean meaningful information from. The very first thing that you'll see is what is your total revenue? What is your total income? And if at all possible, it's really great to be able to break your income down into different categories. So for example, I have a few categories that my income is broken into. I have bookkeeping income, I have advisory services income, I have coaching income, and then I also have affiliate income and book royalties. I can see which of those income streams is contributing to my $5,000 worth of income. Conversely, you might have products that you sell. So some of my clients have a sales of product income sort of category. Some of them sell t-shirts. So whatever it is that is contributing to the income, if possible, break that out, because later on when you produce the report, especially when you produce it month over month and you can start to see trends, it'll be easier for you to see what's making you the most money. Right now, coaching is what's making me the most money, but my bookkeeping and advisory services is on the uptick, which I'm happy about because I am finding that I really thoroughly enjoy the bookkeeping and advisory services. However, some of the services that I offer have some cost to deliver them. So for example, one of my advisory services clients, I have to pull reports that show industry benchmarks. This is a cost that I have to spend. This is money that I have to spend in order to deliver my service. So let's say, for example, your service is that you are a window cleaner. And in your window cleaning business, you hire somebody else to go and manually clean a house's windows. Or let's say you purchase or rent out some rental equipment, not purchase, but rent out rental equipment to reach some of those high to reach places. In that situation, that labor for the individual doing the work and that rental income are expenses that are needed in order to deliver the service of window cleaning. So that would be a cost of service sold. If it was that you are printing shirts for people, then the t-shirts without the print on it would be a cost of goods sold. It's some of the materials you need to make the printed t-shirt, and then you would sell the printed t-shirt as your product. So again, we've just talked about two parts of the profit and loss, the first two parts, and I'm talking about them as you'll see them on the report. So at the top, you'll see your total income. Then you'll see, if you've got it broken out, what were the different income sources. Then you'll see under that your cost of goods sold or cost of service sold. So what are the things that you have to pay for in order to deliver that service or produce that product? When you see that cost of goods sold, when you subtract that from the total income or total revenue you've generated, that is called your gross profit. Your gross profit is essentially the amount of money that you made in the delivery of the service. So in other words, the money that you spent for delivering the service taken away from the service itself tells you what your gross profit is. That's kind of like your real income if you want to think of it that way. If you follow profit first, then you'll know that when you're doing your instant assessment, there is an aspect where it says, what is your real revenue? Well, they subtract out your inventory and they subtract out your subcontractors to tell you what your real revenue is, because they want you to understand that that's the money that you should be sort of divvying up across your different buckets as you make plans for how to budget in the future. So gross profit or gross income is a really important number to know. Underneath of that, you'll start to see what's called operating expenses. These are going to be the things that you have in your business to keep the lights on. So for coaches, a lot of times this will be your bookkeeping software, or it will be your Zoom subscription, or it will be your Google G Suite subscription, or it could be your website domains. There's a whole slew of different categories. And again, in bookkeeping, it's really powerful to keep track of what are the different categories. Part of the reason I say this is, let's say your company has, $100,000 in total revenue, and you maybe spend $10,000 to make that. So your gross revenue is $90,000. If at the end of the year, you have a net income of like $10,000, that means you've kind of like blown away $80,000 in your business. Now, that's a very extreme example, but you might want to know, what was that $80,000 that I spent? I know there are a lot of coaches who say, especially in the first couple years of your business, that every money that you make in profit should be reinvested into the business to develop yourself and to improve the business offer as a whole. So that would be an example of things that you would find in your operating expenses. This could be like continuing education. This could be anything that you purchase for planning, for organizing, for your office supplies. It's going to be a whole lot of different stuff. And probably one of the most expensive elements of that, especially as your business grows, will be your marketing expenses. So it's really important to delineate if you have, software, if you have office supplies, if you have marketing expenses. You really want to know what each one of those is. And again, a bookkeeping software will help you do that. If you are at all uncomfortable with bookkeeping, there are a ton of different courses online that you could purchase. And honestly, you can find bookkeepers at all different rates. So check out Upwork or reach out to your local networks if you're part of a network community. Once you subtract all of those all of those expenses, you are left with your net income, also called your net profit, at the bottom of the report. This is why the profit and loss has its name. It's called the income statement because it wants you to see what that net income was at the bottom. As a matter of fact, I'm sure we've all heard that saying, well, the bottom line is. That's where that comes from. They want to know what's under that bottom line. That bottom line is your net income. That's what you did all the work for, and that's what you're going to get taxed on, by the way. So understanding what that bottom line number is, whether you want to call it net income, whether you want to call it net profit, That is the most meaningful number on your profit and loss, from the regard of understanding if your business is worth having. If that number is negative, you've got a problem. You have to figure out how to make that number not negative. I know there are different industries that run in the red, right? What that means, they have a negative net income for multiple years. Many of these businesses are brick and mortars where they have to take out large capital loans to invest in the business to begin with. That's not typically the case for the people who are watching my channel. So if you are running in the red as a service-based business, you've got a problem and you need to solve it. Okay, how do we solve the problem? Well, this is where it's really helpful to have historical information and, if at all possible, industry information. If you see that you are growing your business, and I've literally seen this with some clients, their revenue is growing very quickly, and so they get excited about the amount of money that's coming in. So then they kind of like blow up their expenses, but they blow up their expenses faster than they're blowing up their income, if that makes sense. So maybe their income has increased, maybe it's doubled, right? Maybe they have 100% increase in their income. But then what they do in the expenses, and they justify it because they need to keep up this growth, is they have 120% increase in their expenses. They've created a leaky ship, right? So maybe it looks okay because they had some stockpile of cash in the bank, but over time they've eroded it and they're eating away. And they know there's a problem because the money in the bank's going down, even though they're still paying themselves the same amount. Or maybe they're not paying themselves at all and they can't figure out where. Where's the problem? Well, when you look at month over month profit and loss reports, you can see pretty quickly, like, well, actually my marketing just went up like by $5,000 because I did that ad campaign on Facebook that only ended up producing 20 clients. And then you can figure out, well, actually I got 40 clients just from going to a networking group. You can start to really pinpoint where you're spending money and it's not actually giving you any return on the investment of what's being spent. Okay. I hope that helps explain it to you guys. I know that this is something that's a little bit abstract, and it's so much more meaningful if you can hire somebody to walk you through your own numbers. Hiring somebody to do that analysis or to coach you through your own statements is such a smart investment. And I like to tell people all the time, like, remember that when you hire a business financial coach or a bookkeeper, these are expenses for your business. So don't feel like you have to go put that on the personal credit card. My absolute favorite thing is to tell people to make enough money in their business to hire the support that they need to further expand their business. Do it incrementally, get what help you can, whether that's through an online course or by hiring a one-time 2-hour deep dive session with a financial coach. You would be surprised by how much you could learn by having a very focused conversation about your stuff with your numbers, and you can make some pretty profound and powerful decisions in those moments. All right, guys, I will leave it there. I think in the future, I will do another video specifically for balance sheets. But if you have more questions about your profit and loss or income statement, whichever way you like to call it, please leave those in the comments below. I would love to address them for you. Have a great day, and I'll see you in the next one. Bye.